Welcome along to the deep dive. This is where we really try to explore those crucial insights, help you cut through the noise, get right to the important stuff. Today, we're taking a deep dive into investing, and our mission, well, it's to really get our heads around why having a long-term mindset isn't just, a nice idea, but how it actually gives you what some sources call an enormous edge. Really powerful stuff. So get ready to maybe rethink how you approach the market. We'll be touching on emotional stability, patience, and that incredible power of compounding. Often underestimated, I think.
Okay, so let's unpack this. This claim we've seen, a long-term mindset in investing gives you an enormous edge. That's quite a statement. How exactly does it deliver on that? What's the mechanism?
Yeah, it's a strong claim, but what's really fascinating is how this mindset lets certain forces work for you. It seems to boil down to three key things, really. Patience, emotional stability, and of course, the power of compounding.
Think of it less like just another strategy and more like a fundamental shift in perspective. So instead of jumping at every market wobble, you're actually letting these powerful, underlying dynamics play out over time.
Right.
Turning potential problems into, actual advantages.
Okay, so patience makes sense, but that emotional stability piece, what does that really look like when the market's, doing its usual volatile thing? That feels like where people really struggle.
Oh, absolutely. That's often the hardest part. Emotional stability means you're not slamming the panic button when things drop, say, 10% in a week, or getting totally carried away when everything's booming.
Yeah, the FOMO effect.
Exactly. You stick to your plan. You understand that volatility is just, it's part of the deal for the long haul. It's about being anchored, right? Not just blown about by every news headline.
And it's not just about positive actions, is it? This mindset, it sounds like it's also about what you don't do. We've seen it helps you ignore short-term noise and crucially resist impulsive decisions, which, let's face it, in today's world with a 24/7 news cycle, social media, everyone shouting opinions, that sounds like a genuine superpower.
It really, really is.
Yeah.
And if you connect that to the bigger picture, by tuning out that noise, that constant chatter, and managing those impulses, you free yourself up to stay focused on what actually matters, the fundamentals.
Ah, okay. The fundamental.
Yeah, and this brings up a really important question for you, the listener, the investor. Are your decisions based on, the underlying value, things like a company's actual earnings, its position in the industry, maybe broader economic trends, or are you just reacting?
Reacting to the latest market swing or some hot tip you saw online?
Precisely. A long-term view lets you lean into informed, deliberate choices rather than just, reacting out of panic or maybe even greed.
So what does this all mean then, tangibly, for you listening? Beyond just hopefully growing your money, what are the sort of real-world benefits here?
Well, the benefits are pretty clear and honestly quite compelling. This approach, it significantly reduces stress.
That's a big one.
Huge. It also increases consistency in your actions, and ultimately, it helps build lasting wealth. Think about it. Less stress, because you're playing the long game, right? Not sweating the daily ups and downs.
Makes sense.
Increased consistency, because you're not constantly second-guessing or changing your entire strategy every few months. And that lasting wealth, that's where compounding really shines. It's like that snowball rolling downhill idea, isn't it?
Yeah, start small.
Exactly. Start small, but gathers momentum, grows exponentially over time as your returns start earning their own returns. Short-term thinking just can't compete with that kind of long-term power.
Right. And these outcomes, less stress, consistency, wealth, they aren't just luck, are they? They're the direct result of what we'd call disciplined, goal-oriented investing.
Yes, exactly. Discipline and goals. And look, this isn't just about the money itself. It's also about finding a way to be, at peace with investing. Aligning what you do with your actual long-term objectives kind of forces you to ask yourself, is my current approach truly disciplined? Is it genuinely goal-oriented? Are my investments actually working for my future? Or are they just a source of constant worry?
So to wrap it up then, the core message seems pretty undeniable. A long-term mindset isn't just like one option among many in investing. It really does seem to be a powerful, maybe even essential tool, a significant, enduring edge for success.
Absolutely. And maybe here's a final thought to leave you with. If the greatest edge in investing really does come from that kind of enduring patience, how might cultivating that specific patience in your financial life? How might that reflect or maybe even enhance patience in other parts of your life, outside of money altogether? Something to think about.